Hello, it's Wednesday, November 23rd, and I'm Emily Douglas with UFX Markets Daily News. The dollar advanced against the major currencies on demand for safety despite the U.S. GDP, which came out at 2.0%, worse than analysts' expectation of 2.4%, a sign that the Federal Reserve may provide more stimulus. In addition, Federal Reserve policymakers said the central bank should consider easing policy further, according to the minutes of their November 1st and 2nd meeting. Wall Street closed negative as the Nasdaq decreased by 0.07% and the Dow Jones by 0.46%. Crude oil fell by 0.40% for the fourth day in a row, closing at $96.80 a barrel. Gold increased by 1.40%, finishing at $1,702 an ounce. Today, unemployment claims are expected at 389,000 versus 388,000 last week. Core durable goods orders are expected to weaken from 1.8% to 0.1%, and personal spending is expected to decline from 0.6% to 0.4%. The euro gained versus the dollar as demand for safety increased, and data was forecast to show European manufacturing and services contracted amid the region's sovereign debt crisis. It's important to notice that the International Monetary Fund revamped its credit line program today to help countries facing outside shocks. The euro-US dollar is straggling around 135 levels over the past day. The momentum continues to be negative for the euro and probably will continue to decrease. The next support level on the 1-hour chart is located at 134.60, and breaking this level probably will lead the pair towards 134.30. Overall, the euro-US dollar traded with a low of 134.68 and with a high of 135.68. Today, German manufacturing PMI is expected at 48.4 versus 49.1 prior, and Eurozone manufacturing PMI at 46.6 versus 47.1 prior. Industrial new orders are expected to become negative from 1.9% to negative 2.4%. The pound fell versus the dollar as the region's sovereign debt crisis dampened prospects for growth. Investors' high concern led them to prefer safe haven currencies such as the US dollar. As long as the Great Britain pound US dollar is trading below 157 levels, the pound continues to be bearish. The next support level is located at 156, and if the pair break down, this level will probably see it declining towards 155.60 or even less. Overall, the Great Britain pound US dollar traded with a low of 155.82 and with a high of 156.91. Today, BBA mortgage approvals are expected to be 32.3 thousand versus 33.1 thousand prior. The yen traded unchanged versus the US dollar without a clear trend, as investors have doubts if the Bank of Japan may again attempt to weaken the currency. Investors are aware that another intervention could come at any time, which could spur a sudden rally. Technically, the US dollar Japanese yen is on a downtrend as long as it is trading below the 77.50 level. No economic news is to be published owing to a bank holiday in Japan. The Canadian dollar declined against the US dollar as Europe's sovereign debt crisis spurred demand for safety assets such as the US currency. The currency also dropped as crude oil, Canada's biggest export, fell. As long as the pair is trading above the 103 level, US dollar's momentum is positive. The next resistance level on the 1-hour chart is located at 104.20, and breaking this will probably cause the pair to continue to rise towards 104.80 or even more. Overall, the US dollar, Canadian dollar traded with a low of 103.46 and with a high of 104.13. Today, Bank of Canada Governor Mark Carney will be speaking. Thank you for joining us today. For more information, please visit us at www.ufxmarkets.com for all your online trading needs. I'm Emily Douglas, wishing you happy trading.